Hi, my name is Darren from HCJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor and privilege of speaking with George. George, can you please introduce yourself?
Thank you, Darren. My name is George Dimov. I'm a certified public accountant, and I have a team of 14 senior professionals. And what we do is the same type of thing: demystify taxes as much as possible, and with a focus in international and typically complex situations.
Fantastic.
I thought that was really interesting what you said because I saw an article in the Wall Street Journal a couple months back having to do with millionaires leaving the UK. And I think, obviously the Wall Street Journal has their own take of things, which in a lot of ways is, very reasonable. And I think the kind of crux of the article was they're being overtaxed and overregulated. And, one thing that you said here is really interesting for me. Can you explain to me what you were saying on that topic where they moved in around 2016 and then they left later, or what was that? I just so I can understand that part. And this is just my own personal curiosity there.
Like in the early part of the 2000s, I mean, London had, some really golden years. And particularly, it was a magnet for Western Europeans, for Asians, particularly Russians, which is, of course, a sort of a political soft complexity right now, given the conflict going on in Ukraine. However, things began to pivot, and probably I'd probably need to look at the data, but I'd say towards the end of the 2010s. And again, this is before there was any change in tax policy. You would have seen a decrease in the net inflows of high net worths and the exit of some particularly high profile billionaires. And again, tax remained constant. You still had the non-dom regime. I think there are vested interests. At the end of the day, these media houses are businesses like everyone else, and they have a vested interest in pushing a particular narrative. I look at research. For example, there's Professor Christobal Young. I think he's from Cornell, but he may be at Stanford now. But anyway, so what he's done is he's actually looked at the data. So, he's took anonymized data from the Internal Revenue Service, which is available for any academic who wants to do that sort of research. And then he's done some work with Forbes, the publisher that does stuff internationally. And I've even looked at data from the Investment Migration Council and some research that they have online. I think it's them. But basically, where you see peer-reviewed articles. So peer-reviewed, so it's not just one person espousing an opinion, but it has been reviewed by peers and it's data-driven. It shows that, I mean, of course, there are exceptions to everyone, but generally speaking, high net worth individuals don't go chasing taxes or don't go chasing low tax jurisdictions. They're motivated by other things because when you think of it, in fact, the data shows that the wealthier someone is, the less mobile they are. But the more educated they are, the more mobile they may be. So there's a bit of conflict there, but generally speaking, and it makes sense because a lot of it is social capital, right? If you are a big real estate guy in New York, a lot of it you're connected, right? You're connected to the big banks, you're connected to other developers, you're connected to guys on the retail side, the family offices. If you were to pick up and you go to, I don't know, let's say, Paris or whatever, you don't have any connections anymore. You can't just pick up the phone and speak to the mayor or a lot of it is based on that social capital, and that social capital is not necessarily mobile. So there are some anomalies within the data when you look at the US, as in, people tend to move to Florida. But again, there's a lot of discussion around the Florida anomaly, but generally speaking, they're not chasing taxes. And in the UK specifically, one could argue, and I was born in London. I was born in South London. I'm in and out of London probably every 6 to 8 weeks. I'm definitely involved. We have an office there. We have clients there. And there is a lot of complexity around what's going on in the UK and London in particular. And, in terms of, things like crime and just basically things that impact the quality of life. Perhaps the removal or the restructuring of the non-dom regime into the whole FIGS or the foreign income and growth, that whole scheme, that whole pivot, perhaps may have been a straw that broke the camel's back. But even before that change in tax policy was announced, we were seeing the exodus. So, those are my thoughts.
Yeah, I really like how you said that. That sometimes for people that are wealthy, tax is not as much of a consideration as much as where they actually want to be. You know,
Yeah.
you called it quality of life, but I'd say even further back, all all things considered, where do these people want to go? And people that are very educated and are very wealthy have all this flexibility. And you know, this explains one other thing that we've noticed. Even in bad years, certain luxury items, very high-end luxury items, they still sell. They still sell because the people that have this amount of money, and we're dealing with high net worth people every day at our jobs. When they have this amount of money, they're fine with paying tax or paying professionals to handle regulation of regulatory compliance or tax compliance. Okay, because it's where they want to go. You know, life is short, and you have this money. What are you going to do? Are you going to go to the lowest tax jurisdiction that you don't want to be? Now, obviously, social capital and where you're doing business is also super important, which you mentioned. You know, but then even for ones where it's not, let's say, you know, in the context of the working rich, okay, which is what you said, you know, the high end real estate agent that's selling the $60 million apartments in New York, or the same equivalent in California, which you brought up. You know, these are places where a lot of the most wealthy people in the country are living in San Jose, San Francisco, New York City, and the Washington, D.C. area. Okay, because that's where decisions are made. That's where money is made. That's where business is happening. That's where innovation is happening from a technology standpoint. And these are all the highest tax jurisdictions in the country. Okay, especially for California and New York City specifically, because they have a city tax on top of everything else. And so, why are these people living there? It's exactly what you said. You know, it's kind of because they want to, they can afford to do so. And you know, are they? And you mentioned the Florida exception. Yes, you had that, but you know, and this is something where I haven't looked at the data, but I have seen, you know, a little bit of softening of that. I've seen people go there during the COVID years and decide to go back home to wherever they came from, and oftentimes it's a higher tax place.
George, if someone wants to get in touch with you, what's the best way to do that?
My website is a great way. You can go on our website, which is Dimov Tax. That's my last name. That's EIMOV tax.com. Or you can send an email directly at info@dimoftax.com. Those are two great ways to get in touch with us. We also have a phone number. You can also call us. And the best phone number is 833-829-1120. That's +1 833-829-1120.
Fantastic. Thank you.